So, the Fed doesn't move markets anymore. Earnings? Outdated. Global wars? Background noise. These days, the smartest people on Wall Street are tracking something far more volatile, far more unpredictable, far more human. Donald Trump's tweet location. They won't say it out loud, not on the record. But in back rooms and Discord servers, hedge fund analysts whisper the same two words: Flushonomics. It started, like most market superstition, with a pattern. Not a policy, not a law, a pattern. A junior analyst at a mid-tier fund in Manhattan noticed something strange. 3 times in 1 week, the former president tweeted inflammatory nonsense between 9:28 and 9:35 a.m. Each time, the market reacted, violently, once up, once down, once sideways, but only after a fake rebound. The tweets weren't what mattered. The timing was. They always came from the same device, same geolocation, same internal tag. Trump Mobile 1. It was, apparently, an iPhone registered to one specific room in Mar-a-Lago, a room with gold trim, a room with notoriously poor acoustics, a room, some believe, where major geopolitical decisions have been made, in the company of Fox News reruns and a surprisingly powerful flush handle. Analysts shrugged it off. Coincidence, they said, until it happened again, and again, and again. By month's end, 15 major market movements had followed a Trump tweet that originated from what one report quietly labeled Zone 7. No one explained what Zone 7 was, but insiders had a nickname for it. The Throne Room. A hedge fund based in Connecticut ran a test, just for fun. They built a predictive model based solely on Trump's tweet timestamps and geolocation tags. No economic indicators, no Fed tracking, just raw location-based data. It outperformed the S&P by 12%. They called it a fluke. Then someone put real money behind it. And that's when the market started moving in sync with something nobody could explain. Flushonomics was born. The theory spread like wildfire in encrypted chats. Discord groups with names like Gold Handle Signals and the 932 Club started sharing annotated screenshots of Trump's tweets alongside 5-minute candlestick charts. There were no explanations, only phrases like Zone 7 tweet, short the Dow, golden flush alert, load up on volatility. Code brown incoming, brace for whiplash. The SEC was silent. CNBC danced around it. One anchor raised it on air, awkwardly joking, "It's not the jobs report moving this market. Unless there's a new kind of number 2 we're all missing." His mic was cut 10 seconds later, but by then, the damage was done. Flushonomics had entered the bloodstream. Every tweet was a potential signal, not for its content, but for its origin. Traders no longer asked, "What did he say?" They asked, "Where did he say it from?" Analysts created dashboards tracking Trump's phone movement across known Mar-a-Lago Wi-Fi zones. Whenever the device moved near the golden zone, alerts were triggered. Bloomberg ran a segment, half joking, titled Presidential Plumbing and the S&P 500. It was the most watched clip of the week. Meanwhile, Trump himself had no idea. Or maybe he did. No one could tell. He continued posting. Often inflammatory, often nonsensical, often early morning. And the market danced. One Tuesday, at precisely 9:31 a.m., Trump tweeted the word, "losers," in all caps, followed by 12 American flag emojis. The tweet came from Zone 7. The Dow dropped 200 points. By 9:44 a.m., it recovered completely. By 10:12, it was up 300 points. Traders called it the double flush pattern. A research paper, quietly distributed within 3 funds, mapped tweet length against fiber intake. The conclusion: Longer tweets preceded sharper reversals. Nobody wanted to believe it, but the data kept coming. A startup in San Francisco launched Toilet Tweet AI, a machine learning tool that analyzed metadata from every Trump post to detect ambient noise, reverb patterns, and subtle background cues. Their pitch deck called it the new technical analysis. It raised $6 million. Flushonomics became a verb, a warning, a mantra. "Careful," traders whispered. "He's flushonomicing again." The White House declined to comment. Mar-a-Lago increased its Wi-Fi encryption. But the tweets kept coming, and the market kept reacting. One day there was silence. No tweet, no Zone 7 alert, no signal. The market froze. Volume dropped 28%. CNBC anchors stalled for airtime, speculating about interest rates, foreign policy, anything to explain the lull. At 11:17 a.m., a single Trump tweet hit the timeline. So true. The market surged. 2 hours later, CNN released a photo of Trump emerging from a Mar-a-Lago restroom, looking satisfied. That evening, a fund manager in Boston coined a new phrase, the relief rally. And then came the copycats. Ron DeSantis tried posting from his version of a bathroom. It didn't work. Vivek Ramaswamy live-tweeted from a sauna. The Nasdaq ignored him. Elon Musk joked about installing cameras in every bathroom at SpaceX to detect market-moving moments. Nobody laughed. Wall Street wasn't joking anymore. A trading firm in Chicago began hiring former plumbers as consultants. One memo read, "We believe certain flush handles may correlate to tweet velocity. We're exploring variable pressure modeling." Flushonomics had become a billion-dollar belief system. The IMF released a dry statement saying, "We do not base macroeconomic forecasts on excretory inference." But markets weren't listening to the IMF anymore. They were watching for notifications, watching for movement, watching for Zone 7. It wasn't about Trump. Not really. It was about predictability, power, rhythm. Flushonomics was the most bizarre indicator ever created. And yet, it worked. Because no matter what he tweeted, or when he tweeted, or how bizarre the content, if it came from there, the markets moved. Every Bloomberg terminal in America began including a new alert field. FTL, Flush Tweet Location. On a Friday in May, the unthinkable happened. Trump tweeted, from a new device. No metadata, no zone, no sound cues. Nothing. The market panicked. Traders didn't know whether to buy, sell, or scream. The S&P dropped 400 points in 17 minutes. Gold surged. Bitcoin collapsed. Then, 12 minutes later, Trump posted again, this time from the original device. Back in Zone 7. 2 words. Back home. The Dow recovered in 30 seconds. Flushonomics had been revalidated. And Wall Street sighed in relief. They didn't need to believe. They just needed the pattern. At this point, nobody asked why it worked. They just needed to know if it would continue. The market, after all, isn't rational. It's reactive. And Flushonomics, as insane as it was, had become the most reliable signal in a world spinning off its axis. Traders no longer questioned it. They monitored it. They built dashboards, models, alerts. Some hedge funds even began timing their trades based on estimated duration. Algorithms predicted optimal entry points based on flush length. It was madness. But it was profitable madness. And so it continued. The global economy, hanging in the balance, not because of interest rates, not because of oil, not because of war or labor strikes or inflation, but because one man might have just sat down. This is the irony, and that's the irony. so. Disclaimer. This video is a work of satire and fiction. It is intended for entertainment purposes only and should not be interpreted as fact, news, or a representation of real events. Any similarities to actual persons, living or dead, or actual events is purely coincidental.